Hey folks, Dan Frio here. Some breaking news. Well, ADP payroll numbers came in and the numbers are dismal. But then you might think, okay, this might be good news for the Federal Reserve. Does this mean they might cut? Mortgage rates will get better? Well, that's what we're going to talk about in today's video, folks, because if you're watching this video, you're their homeowner trying to figure out, can you refinance? A home buyer thinking, okay, if they stay here, maybe I can buy. My goal is each day is to come in and explain to you guys what in the heck is going to go on with those today and the whys behind it. And the reason why I do this, I'm actually a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. My slogan's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Well, I'm going to have a live event today to show you that, and I'll try to put that link right up through there. So let's get over to these things. That's why you're here. So mortgage rates, they ticked up just a little bit today, but then you're going to say, okay, the ADP payroll numbers, they're looking pretty dismal. So shouldn't this be good news for the Federal Reserve to cut lower mortgage rates? We'll get to that in a second, but let's go through these numbers. They keep telling us there's a low hire, low fire environment. I get it, but here's the bad part. Private companies added 22,000 jobs over the month. 74,000 came from servicing and healthcare. So if you take the difference there would have been a loss of jobs. The only good news out there is if you do have a job, you probably most likely got a raise of about 4.5% to 5%. So that's what's going on this morning. There is some other financial news coming in, but here's how bad this news is. The reading last time, 37,000. They expected 46,000. It came in at half that. So you're thinking, okay, this is great news because the Federal Reserve is going to say the jobs market's crashing, so we have to cut rates. Well, before we go there yet, we're having some more numbers on the manufacturing side later this afternoon. It's going to tell us how manufacturing is based on these numbers. It's not good. Also, it's going to give us the PMI and the prices. It's going to give us a little more bead on inflation. So how's the bond market react in this? You would think, okay, bad jobs market equals better rates, right? That's what we've been told. Well, let's see what the market's, that's not happening. So here's how we watch rates. We got the MBSs down 11 today. So if you're new to the channel, here's how we follow rates. Over through here, this is a bond that controls conventional loans. Up through here, these are government loans like FHA, VA, and USDA. You can see they kind of correlate together. They're a little bit different, but the news over here isn't good because here's what happens. If the price of the bond goes down, that's what you're seeing over here, the rate goes up. So this means rates might go a little bit higher today. And that you might sit there and scratch your head and say, okay, with the jobs report this bad, why is it getting any worse? That's a great question. Let's go over and see how the stock market's taking this. Well, we got the Dow Jones. It's all over the map. NASDAQ's around the corner, but we got oil right here. This is what we follow when we follow inflation, because this is about 40% of the inflation numbers, believe it or not, in most of the analyst numbers. So if oil can stay even here or lower, that's going to help inflation tremendously. The markets are a little bit mixed this morning. There's a huge amount of earnings coming out this week. I know there's big NVIDIA deals and stuff like that, but did you see Bitcoin? Let's take a quick glimpse at that. That is down even further, 74,000. This was 120,000. That's all I said, guys. When we used to do Stock Talk Tuesday, I said, just buy Bitcoin if you have gambling money because it's a crapshoot over there. But let's get over to it. Now, based on this information, is this going to change the outlook of what the Federal Reserve is going to do? So what we do for that, we go over to the CME group, and they give us what's called the Fed Watch. And this is basically telling us in 42 days, the Federal Reserve is going to do something. What are they going to do? Well, down through here, there is a 90% chance they're not going to do anything at the next meeting, and almost an 80% chance they're not going to do anything at the meeting after that. And then after that, we're going to have a whole new cast of characters at the Fed. So my expectations right now is this. If you're a homeowner, put your mortgage information in here. I'm going to change that number because people stop putting their information in there. It's called RateWatch 2.1 AI. I put AI in there just to kind of look fancy. But what I want you to do is put your mortgage information in there. And there's two things I'll monitor for you. The rate. So when the rate hits a certain percentage you want, we'll call you, go over the numbers and see if it makes sense. Or how much of a monthly savings. You might say, okay, Dan, I want to save $400 a month. When it hits there, call me. That's exactly what we'll do. But if you're a home buyer, you're looking to build, what do I think rates are going to go? Well, let me give you one product that I just created and launched yesterday before we go there. Are you looking for some mortgage calculators? Folks, I have a slew of them over through here. I've been adding them to this list daily. Yesterday, we added in, what was it, right through here. If you're self-employed, check out this calculator right here. You're going to plug in your self-employment income. It's going to tell you exactly what the banks use for that calculation. You don't understand a reverse mortgage? Check it out. You want all this stuff together? Check it out. Secret code, Dan, capital D, capital A, capital N, and you can get them for free. But give a buck, folks. My kid worked a lot on these things. So those are all kind of calculators you can look through. There's 2-1 buy downs, figuring out there, should you refinance? What's your break-even cost? Should you wait? There's a whole slew of information. So check out those calendars. But let's get over to here. What do I think rates are going to do if you're out there looking to maybe buy in the spring? I met with a realtor yesterday in my hometown of St. Charles, and Matt Kimbrick. Awesome guy. So if you're looking for a house in St. Charles, Illinois, reach out to him. They had a record January in closings. He's like, it was better than COVID. And I'm like, really? So the market in some areas isn't so bad, folks. So some of those calculators to figure out. But let's say you're looking to buy in the spring, you're looking to build. Where I think these are going to go, here's my thoughts. In Q1 of this year, and I'm staying with my forecast, so check out my forecast videos, as I'm saying rates are going to be between 5.875 and 6.25. And we keep teetering at my top range. But I'm still saying here's my outlook, and here's why. I think inflation's ticking up, and we're going to have the January effect. Check out my videos. Subscribe down there so you understand my lingo. But after about January, February, inflation's going to topple and start to come down. It might come down considerably. If you don't believe me, you don't have to, but go down there and let me know your thoughts. And I think at that point, that's when we're going to see rates topped out, and I think we're basically almost there right now, and then start to teeter down. Are they going to crash? No. They're just going to stay right about 6.25-ish. So if you're a homeowner out there, check it out. If you got a rate over 7%, see how much money you can save. But if you're looking to build or buy, reach out to us. Those are my expectations on rates. And we have a whole bunch of programs. I bet half these programs you guys don't even realize. So if you're out there looking to buy that house, do you know what credit score banks use? Do you know the income that they use, especially if you're self-employed? Do you know all the programs that you might qualify for, and maybe the bank only offers you what they're pushing you? So if you really want to dissect all these, reach out to us. Love to help you. So here's what I do, and here's who I am. Like I said, my name is Dan Frio. I've been doing this for over 35 years. I work at a bank that gives me licensing in all 50 states as well as Puerto Rico. The other thing we did is we set up ourselves with almost 40 other lenders. These are banks, credit unions, and mortgage companies. Why? We need more products to offer you. And if they have better rates, we can use them. So that's what we've done here. So if you want to search on your own and do all that hard work, God bless you and try it out. But if you want us to track rates for you, put you on the right path of home ownership, we'd love to do that. And also don't forget all these calculators that we have. They're down below. Just click one, it'll take you to this portal. Remember the code, Dan. So that's it for today, folks, this morning on our opening bell. So ADP payroll reports, they're having some effect on the markets. Not what I thought. So I thought with a bad employment number, we'd have maybe better rates today. And nope, it looks like rates might tick up just a little bit today. So if you want to lock in now on these savings, reach out to us. But if you're concerned on can you afford a house in 2026, make sure you reach out to us, and we can help put you on the navigation path of home ownership if that's your goal. So folks, I will be live today with Alan at 1:30 o'clock Central Time. Check out our behind the screens on how we show you how we shop your loan with over 30 different lenders. So now, hopefully, if you're a homeowner, home buyer, realtor, or loan officer, you understand a little bit more about what might happen with those today and the whys behind it. Thanks for watching, folks. Have a fantastic afternoon. Hope to see you at the closing bell, but I hope to also see you live. Take care. Bye-bye.